S&P and the NASDAQ also lowers. Doug Flynn joins us, certified financial planner, co-founder at Flynn Zito. After the inflation numbers, right, the hotter than expected consumer price index, I guess you would say, your reaction to that and what the market made of it.
Yes, the market's sort of a leading indicator. What it's expecting is going to happen. And what it was expecting was inflation to continue its walk downward and getting lower and lower. And so it priced in those expectations. And then when you get a number that's higher, it's saying, well, inflation is stickier. And that means it's going to stick around a little longer. And so we can't lower rates as quickly as we anticipated. And so the expectation in the market was not that long ago, about an 80% chance of lowering in June. That's down to 20%. And it's looking like maybe it's going to be September. And who knows, if inflation continues to come out high like this, they're going to keep pushing it off. And eventually, when it settles down, they can begin to lower. So that's what's happening with the market.
What do you think's going on with inflation? So let's talk about it with a few kind of real-world examples of what people are paying for. First of all, cars. Like most people, except maybe some people live in the cities, but most adults in the country have a car, right? I think it's probably 9 out of 10. Car insurance is up from this time last year by more than 22%. Yeah. Then the car repair, what you pay to get your car fixed, is up by 8%. So that kind of thing. I mean, what's going on here?
Yeah, well, those things people feel, especially, I mean, used car rates and new car costs got really high. They've started to come down, but people are still, they haven't bought all new cars. So your maintenance is probably something you need to do more of if you're keeping an older car. And those costs have gone up. A lot of places have continued to raise much higher than this 3.4% or 3.5% rate that they come out with. That's just a basket of everything. Some of those things in there are energy. Some of those other costs, are 20% raises, and some are actually went down. And so it's a basket of everything to give you an idea. But absolutely within there are very expensive increases for people that feel it. And, it may be a smaller part of the overall CPI, which is what gets put out. But those things absolutely people feel when they have to pay for it.
Right, because most people, again, they have cars, right? And they have to insure them by law, so you're paying a lot more to do that. Now, the other thing we talk about all the time is what you're going and paying at the grocery store, right? What you're paying for food. And what's interesting about inflation, you see these increases only, quote unquote, 1.2% for groceries. Now, eating out at restaurants up by 4%, that's still more. But that kind of, to me at least, brings up the larger point about inflation. When prices are still going up, maybe, you're still paying more, even if they're not going up at the same rate that they were some time ago, right, with that 1% number.
It's cumulative. So you had a 9% rate, and then you had a 6% rate. Well, the 6 was on top of the 9. Right. And now you went to 5, and it's on top of that, 15. And so now it's 4 and 3, but it's all on top of that in the last couple of years. So that's why you're up 25% overall in combined inflation over the last couple of years, and every little bit that goes up is just more on top of that. So
last example is shelter, by the way, and you can continue this thought, but it's the same thing. My home ownership's up 5.9% and rent's up 5.7%. So again, to your point,
exactly,
it adds up. But now the question is, when does the tide really turn for when people start to, feel something different in their lives, feel more positive about the economy, even if the numbers, and what wasn't the case today, but even if some of the numbers start to say, things are getting better?
Yeah, unfortunately, I think you have to go through a little bit of pain before you start to feel good on the other side. I mean, nobody feels better that inflation goes, down to 3.1 instead of 3.5 if you've got things mixed in there that are 6 and 20%. So I don't, everything has to really tamp down, but it looks like that's continuing on at a higher pace. So people are going to feel this, and they're going to start running out of the cash that they set aside. And this is why when you print a lot of money and you put it out there and it chases fewer goods, it's that classic example. It's going to drive up prices, and it's a little bit stickier than everybody anticipates. And so we'll see if the Fed actually does lower rates this year at some point when they get inflation to their target, which I think is too low a target. But nonetheless, that's the target they've said. And until they get closer to that, they're not going to lower. So it may be later in the year or early part of next year for all we know. So you have to kind of build around that.
True. It was fun while it lasted, though, wasn't it, Doug? All that money printing, we had low rates and everything, but now, now we pay the price. Such is life. Thank you, Doug. As always, Doug Flynn.